The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, we saw lower action in the grains and oilseeds on Thursday, with soybeans and bean oil the downside leaders there, and slightly lower in corn and wheat. Meantime, you look over at livestock. We had feeders in the green, fat cattle a little bit lower though, hogs finding some green too. Kind of a mixed market day overall on Thursday. Let's talk our way through some of what we're seeing though, and take a look at what's happening in these markets. Joining us for analysis, Brady Huck with Advanced Trading is back with us here on the show. Brady, good to catch up with you again, buddy. How are you?
I'm doing good, Jesse. Thanks for having me on here today.
Absolutely. Let's start over in the livestock trade and take a look at what's happening in cattle right now. I think that's something. Do it a little bit different here on the show today. I guess 1,000-foot view. We got a cattle on feed report coming up on Friday. I think there's a fair amount of positioning going on already in the cattle trade, but the feeder market's been on fire. It's been the leader. What are you watching in this cattle market right now? What's some of the big things that are catching your eye this week?
Yeah, well, the bulls have definitely been winning over the past few weeks on the cattle side of things. And it's great to see that market recover. Looking back, just taking, a few steps back here, this feeder cattle market was, 260, 270 back in the spring time frame and has sold off, kind of a cliff there in August down into October. And we've recovered a lot of that. Those losses were not quite taking out the highs yet that we saw earlier in the year. But it's good to see us back there at close to those levels here. To me, on the cattle side of things, I feel like this euphoria of good wheat pasture grazing out there has certainly been a strong undertone in the market to lift the demand for stocking those pastures, buying stocker cattle, putting them out on that wheat. If that wheat's there, we need to put some ruminant animals out there to graze it off. Otherwise, I'm missing out on some opportunity. So let's go buy some beef and get them out there on that wheat. I think that's the biggest thing. One of the biggest supporters right now on the cattle side of things. Got a big cattle on feed report tomorrow. Also got an important commitment of traders report tomorrow too. We've got a massive fund long position in cattle and hogs that guys cannot ignore, because we know, Jesse, when those guys decide to exit their positions, that it can be a free fall cliff on these markets and just send them down quicker than you or I can get any position on to protect ourselves.
Yeah, and you worry about something like that happening. I know I've heard some rumor that the placements number in the on feed, I mean, we could see a record number there. It's been rumored by some folks in the trade. I think the range is 100 to 107%. And so something, out of the ordinary could really disrupt that trade going into Monday for sure, along with commitment of traders. I wonder this too, Brady. Has there been a bit of a disconnect between cash and futures in cattle here as of late? What are your thoughts there?
Yeah, on the fat side of things, especially out in the deferred, there's just a lack of premium out in the market, and you've got, a negative basis out there. I'm not sure how to say that, but yeah, the fat cattle side of things, we definitely have a disconnect between, especially in the deferred values going out there further. So, but the feeder side of things, front months really gained a lot on the future side, and we're par, and the index has been leading us higher on that front. But bulls, if you're bullish this cattle market, you're still looking at that supply situation, the lack of beef cows, declining inventory availability. You got heifer retention on the horizon that's going to further tighten up the available feeder cattle supply. But the bears, they argue the big fund position. There's a lot of questions on the health of the consumer here. How healthy is the consumer in this interest rate environment? We saw Target earnings this week that disappointed. Some of those little clues out there as to what's the consumer spending money on and how much can they afford to spend on beef, premium cuts like beef. So it's interesting. The cutout has been pretty volatile, bouncing between 300 and 320, Jesse. And if we saw that thing broke below 300 for one reason or another, that would definitely maybe shift this price paradigm we've been chopping around in. But the lean meat market really propped up the cutout early, and that tone has somewhat changed here over the last month, where middle meats, your rib, your loin, they're supporting the cutout as the chuck and the round have fallen off. But as we get past holiday trade, Thanksgiving, Christmas, will those middle meats be able to continue to pull on that demand? Watching that cutout value and that demand here as we get through holiday season, gonna be really important for cattle guys in this cattle market, Jesse.
We've talked about this before, hedging your risk in this cattle trade, as we've, just seen the way it's acted the last several months, and a lot of folks thinking, oh, it's going to go higher, and maybe not protecting their downside risk here. And you mentioned to me things like LRP too is out there, et cetera. So, I mean, the risk of trading futures and options is substantial. We know this, but from a risk management standpoint in cattle, I mean, should we be locking in some hedges here heading into the holiday season just to be safe? What do you think, Brady?
Well, the amount of equity it takes, whether you're a cow calf guy and you're raising them, or you're going out and, talking to your banker, getting a note and borrowing money to buy these things, there's a lot of dollars on the line. And it's just your due diligence to go out there and protect that equity for that unexpected headline that comes across. So LRP is a great tool to go out there and give you foundational risk management, leave the upside open. I'm fine being bullish this market, and I don't want to miss out on home runs and grand slams when they happen, but I just don't want to go, lose a bunch of equity because I'm blindly bullish out there and think it just has to go up. That unexpected headline, that's the one that really catches you off guard. Nobody predicts it. Nobody sees it coming, and it can really hurt you down the road.
A home run's always good, but you don't want to strike out either. So if you get a single or a double, sometimes that's okay too. They all add up together. Let's look over at grains. I'd love to get some thoughts there. Just it feels like that the grain markets have been very headline driven this week, and it's really come down to Russia-Ukraine tensions. I know the China-Brazil agreements we got on Wednesday, that's had some influence. Soybeans, the downside leader on the day Thursday, kind of weighed on corn and wheat too. I mean, what's standing out to you in grains? I mean, does that pretty much sum it up? It's just been headline risk in these markets this week.
I think so. Grain market's been pretty boring from my standpoint. Cattle have been keeping me busy here, but that negative tone on the grain market today, it feels like corn wants to do something and go a little higher, but it just feels like beans are just an anchor on this market. And the headlines yesterday with the Brazil China stuff, you got Ukraine Russia conflict, that headline 2 years ago would have sparked a limit up type of move in wheat. And here we are today, and wheat's down 5 cents on a headline where we're sending bombs over to Ukraine. Just a testament to the numbness we have to some of that drama over there in the Black Sea. Don't want escalation, but I don't know, right? The Black Sea has continued to slam export business out there. They cover up the corn and wheat in that region, and that hasn't resulted in increased U.S. demand other places. Now we got strong, good corn export demand going, and we got some great pieces to this puzzle here on the front side of this demand, but there's a lot of uncertainty about the length of it and where it goes down the road. But ethanol and exports on corn have been a huge shining light, but that bean headline, it seems like South America weather is non-threatening, and right now there's a few more sellers than buyers in your grain markets.
Thinking of corn, to your point, beans, wheat, the dollar too, I'll throw the dollar out there, kind of just acting as that boat anchor right now. And kind of the same question I asked with cattle. Are we looking at maybe doing some moves in corn and protecting the downside here if we're okay with, 425 board price or whatever the case is? I mean, I know we got December options expiration coming up Black Friday, so there's going to be a lot of moves in this corn market here in the very short term. So am I protecting downside risk in corn right now more so than anything?
I think we're just naturally in that time frame where harvest is wrapped up. We're having some meetings with accountants, bankers, and figuring out financial situation, cash flow, all that. What I'm worried about is the hidden costs of ownership, interest rate, storage charges, and just, there's a cost to tying up cash in bushels. And I think there's a lot of things guys can do to go out there and, reward an attractive basis, but still stay in the game just in case the market, takes off and we get a buyer for some unknown headline that surfaces here. So I want to stay in the game down the road, but I also want to generate cash and avoid some of those hidden costs. I like where we're at with corn, beans. Gosh, man, if we had a 10 handle back in front of it, which we did a couple days ago, I'd be more excited to do something on those. And then, looking out to next year, if we get knocking on 450 D's 25 again, I think that may entice some guys to get a little more excited about doing some stuff. So got to always be looking forward versus looking back in the rear view. You don't want to fall behind, Jesse. Don't want to fall behind.
Absolutely. No, you do not. No, you do not. Brady, good thoughts. Anything final you'd share or reiterate with folks here to close out the show today?
Nope. Markets are moving. Don't fall asleep here at the wheel. And if you guys have any questions you want to talk to us specifically, be glad to. We're live at 9 every day. I love our show. Love your show, Jesse. Live at 9 on the Advanced Trading channel. Check us out there too. Good friend of the channel, Jesse. Thanks for having me today.
Absolutely. You can find them on YouTube, the ATI Pro Media Advanced Trading channel. Again, as Brady said, live at 9 every day. Find them online as well if you want to reach out for a conversation. Brady, good to have you back with us here on the show. Thanks so much. I wish you and yours a happy Thanksgiving. We'll talk to you again real soon.
Same. Back at you.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.